Hi, this is James Nelson, partner at Massey Knackle Realty Services, and I'm here to bring you the 2013 New York City Sales Market Overview and 2014 Forecast. 2013 ended up to be a very strong year with a total of $37.6 billion in sales in New York City. This was down only 9% from 2012. As far as the number of properties sold, the number only dropped 8% to 3,767 sales. We began the last year on a slower note due to the mass sell-off in 2012 due to the capital gains when inventory was depleted. But we quickly saw a great increase in the amount of sales as a result of the uptick in pricing. In Manhattan, the average property sale last year was $1,041 a foot. That was up 16%, whereas the outer boroughs pricing rose by 10% to $288 a foot. An interesting trend last year was that 79% of the sales were in the outer boroughs. That's up 8% from 2012, 71%. We see that trend continuing. When you look at the next slide, you can see that for 2014 we are forecasting that this will be a record year for number of sales. Not only are we seeing premium pricing, but we're also seeing a lot more inventory coming online, especially with large sale transactions. You see on the right side, this is just a couple of the $5 billion plus transactions that took place last year. The last time there was a $1 billion transaction in New York City was in 2010 with Google, so we see that trend continuing. On the next slide, this actually shows the sales volume quarter by quarter, and you can see again in the fourth quarter of 12 there was an enormous spike in activity, almost $20 billion in transactions, really attributed to that capital gains increase. The quarterly average has only been about $8 billion, but you look at the end of last year, we had close to $14 billion in sales in one quarter alone, and we think this is much healthier. That was fundamentally driven as opposed to externally driven. On the next page, you can see on page the chart that shows development site sales, and they are becoming a much greater part of the landscape. In 2009 and 2010, development site sales only accounted for 6%. We're now doing more than double of that, with about $5.2 billion in sales attributed to development sites. And that is no doubt, you can also see some very premium pricing where now we're starting to see some downtown sites selling at over $800 to $900 a buildable foot. On the next page, you see large-scale transactions, which have also been on the rise. In 2009, there was only 8 transactions that traded for over $100 million, and last year, or 2 years ago, I should say, in 2012, there was about 10 times the amount of those sales, about 86 sales, but the average transaction size over $100 million was about $243 million. So last year, 2013, these $100 million plus transactions accounted for $22 billion in sales. Here, only 66 sales being over $100 million, but the average being about $338 million. So again, we talk about these large-scale transactions being the drivers, and we do see this trend continuing. We are forecasting on the next page, you can see the total number of sales at over 5,000 trades. This is going to be along the lines of what we saw in 06-07, but again, we feel that average pricing will be much higher. What will be offset and why we don't see the total sales volume increasing exponentially is because we're going to see many more sales in the outer boroughs where the average transaction size is smaller. This next slide definitely speaks to the increased appetite in the outer boroughs. We see the number of properties sold looking at just the last 3 years, 2011 to 2013, and you can see in Manhattan it's been a pickup, but only about 11%. Meanwhile, northern Manhattan has had explosive growth, over 200% growth in the number of property sales. Brooklyn also very strong at 85%, and Queens at 101%. The next chart, I want to talk a little bit more on the percentage of outer borough sales. You can see that Manhattan, in its peak in 2011 in this last cycle, accounted for about a third of all sales, but that's now dropped to about 21%. The next page I think is very interesting because you look at the average sales per borough, and you can see the pricing, and there's been a huge uptick in the last 3 years for Manhattan, about 60% growth in pricing. But the boroughs are still lagging. You look at Brooklyn, which is quote-unquote only seen 31% in growth. There's only about half the pricing increase as Manhattan has seen, and Queens is only at about a third. So we still think there's a lot of upside. You look at the average price even last year in Brooklyn and Queens at $296 and $324 a foot respectively, and there's still a lot of upside potential, we feel. Meanwhile, it's clear that there's been cap rate compression. Manhattan now last year down to about a 4.4% cap rate on average, with elevators, walk-ups, mixed-use office and retail, whereas the average across all boroughs is 6.4%. We're going to be watching interest rates closely because they do seem to correlate, and one thing that we have not seen is back in 06-07 we saw investors willing to accept returns of 3 to 4%, but then borrow money at 6 to 7%, and we don't see that happening again as the cap rates are now kind of tracking directly with where you can borrow money, at least in Manhattan. One of the last slides, again, we look at this growth in land pricing, and on average in Manhattan, we're now approaching $500 a buildable. I think the thing to remember is this does include manufacturing zone sites, hotel sites. I mean, you can still see trading for $300-400 a buildable, but clearly the prime residential sites are well over 800. So, but we are seeing those average at close to 500. The Bronx has been pretty steady, but you see a big uptick in Brooklyn, which in 09 the average was about 100, and then now it's going closer to 300. So it's definitely headed in the right direction. So finally, on the 2014 forecast, once again, we're going to see a huge uptick in sales this year with about $63 billion in trades for about 5,100 properties selling. We think there are strong fundamentals here with office rents peaking, vacancy dropping. Foreign demand has still been a huge driver. We're watching FIRPTA closely. If they did relax these taxes for overseas investors, this could be a huge boost. And although financing will become more expensive in 2014, the rates are still expected to stay low in historic terms. So we're predicting that out for at least another year. We are watching the proposed tax cuts by Cuomo, but also the initiatives that de Blasio is looking to implement, and watching closely. So again, we're expecting a very strong outlook for 2014 with record sales. We are refraining from projecting much further out from there, but from now it does seem like we're in for a great year. So I look forward to being in touch with you all, and thank you.